Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it. Greetings, Algo artisans. Monday, March 9th, 6 p.m. EST. We're going to take a look at the usual suspects today. Before we do, there is a link in the description. It's a free algo. Click that link. It's a quick video. I'll show you how I build algos. I show you how I turn it into code by using Grok AI. And I show you how traders connect their algo to their exchange so the computer can trade for them while they are sleeping, golfing, just not at the computer. You have to optimize that algo before you trade with it, but it is really cool. We're going to take a look at the usual suspects: Nasdaq, USDJPY, Bitcoin, EURUSD, GBPJPY, gold, and silver. Before we do that, we're going to take a look over at Forex Factory to see the economic data that's dropping this week, and there is some pretty big data coming that's going to make a difference in trading in the charts. So nothing Monday or Tuesday. Wednesday's the big day. 8:30 a.m. EST is CPI. That is the primary inflation metric that people look at in the markets, and a lot of people will either bet hard up or down on every market because this affects predictions as to whether or not the Fed will either cut rates, hike rates, or keep them the same. Thursday, we have more data, 8:30 a.m. EST for the US unemployment claims. Friday at 3 a.m. EST, we have the British pound GBP, and then at 8:30 a.m. we have Canadian unemployment data, and then we have more inflation and GDP data coming for the US at 8:30 a.m. EST. 10 a.m. EST Friday is the JOLTS job openings. That's all the data for this week. Wednesday is the big day, so we're going to account for that on the charts. Let's start by taking a look at the Nasdaq. So here's the Nasdaq. We have CPI right here on Wednesday in the morning, and then the market closed right there on Friday. The Nasdaq has been held up. As a matter of fact, the markets are not really behaving like we're going into World War III, which might be telling us that the markets know things might calm down sooner than later. Now, that can always change, and that might not even be what's going on. It might just be machinations keeping everything where it is. Either way, that's the way it's behaving. And the Nasdaq tried to dump last week below 24,230, which was a concerning number, and it's a current lower bound. It actually bounced before it hit the more concerning lower bound of 23,890. Now, if price were to go below that, that's trouble. Price, I think, will stay below 25,500 unless the CPI does something crazy. Like, for example, if the CPI is cool, then it might be a rate cut as expected, and this might head up. But for now, I think we're going to get sideways in between these two bounds for the rest of the week, unless the CPI is a surprise. Let's take a look at USDJPY. USDJPY pulling back. It's been on a massive run up, and that's going back to the 12th of February. We had expected up until that election and shortly thereafter that they might be hiking their rates. And then Prime Minister Takaichi told the BOJ Governor Ueda, maybe we'll hold off on hiking rates. Perhaps that was because they wanted to keep things stable during the Iran affair. That being the case, we might see this actually pull down a little bit. We have a lower bound right now of 156.48. It's actually at a prior resistance, which is at 157.66. Price has come down. It's in the middle of a liquidity zone. It looks like it's going to dip down. It might go a bit sideways. Probably not a lot going to happen for the next couple of days until CPI, but if I had to guess, I'd say it's going to continue to fall, and it's going to grind its way down towards 156.46 as a lower bound. And then, of course, if the CPI is relatively uneventful, it'll probably stay in this range for the rest of the week. Let's take a look at Bitcoin. We had a little move up in Bitcoin, and that might continue a bit, but I don't expect a ton out of it. This is, in my opinion, market noise. If you roll back all the way to the 5th of February, price is more or less in that same range with a lower bound at 62,500, upper bound at 74,000, and price just seems to be grinding sideways in that area. A lot of people got excited when price went from 65.5 up to 70,000 today, or really 69,500. And yes, that is a good, 5-6%. That's notable in any market. However, with Bitcoin, I don't think it's really making a difference. I think it's more noise than signal. I think it'll grind up and sideways, provided that CPI does not do anything surprising. Let's take a look at the Euro, EURUSD. Big move up today on the euro. There's an upper bound sitting at 116.67, and I do believe that will hold. It might break above that, it might not, but as it stands right now, I think it's going to grind sideways for the rest of the week, and the lower bound is going to be 115.068. So we might see price just more or less go back and forth in that range, and maybe even develop a tighter range as the market prepares for CPI. We'll have to see how CPI does. Let's take a look at GBPJPY. GBPJPY has been developing basically liquidity move, liquidity move, liquidity move. And so right now it does appear that it may break up above a current upper bound, which is 212.15. Now, if that does happen, I don't expect a ton from it. The next bound up, the next resistance is up at 215.03. And while it could go up in that direction, and it may very well, I doubt it will. I think it'll break, if anything, above that 212.15, 16 area and just kind of grind sideways, or it might knock its head and start to make its way back down in that range. I don't expect a lot from it. I could be wrong. And of course, CPI is the wrench in the works. Let's take a look at gold and silver. Gold and silver have been held where they are. This has been done with a lot of different machinations of the market. And for the moment, it appears that the market's just going to wait until all that is over or until there's an accumulation. We don't really know what's going to happen with that. But what I think we'll see is more sideways move, lower bound at about 5,000, upper bound at 5,200, and price just rock back and forth. The CPI could make a difference. Right now, I would venture to guess price will be at the end of the week roughly where it is or higher. Now, to break above 5,200 would be notable, not terribly surprising, but I think price may end up knocking its head on 5,200 unless we see big events in the news, which certainly can happen these days, especially with metals and war. War and metals, they interact a lot. So if something surprising happens in Iran, metals just go off the charts in an unpredictable manner. But again, outside of unpredictable things, this will probably just grind sideways as I described. Let's take a look at silver. Certainly a strong move up today. I think most of these strong moves we saw today were actually the dollar getting weaker against things. That said, it might actually head down from the current level, which was about 87, almost on the dot. And then it might grind up and sideways. Whatever the case, though, I think it's going to look a bit like gold, maybe a little more bullish, and then it'll end up either a bit higher or kind of where it is. I mean, it could end up a hair lower as well, as I've illustrated here, but I do think that silver's going to have a hard time making it above $91 and probably will make it below $78 unless there's some kind of something in the market. Like I said, any kind of surprise or machination. So that's what the markets are this week. Not terribly exciting yet. CPI is the wrench in the works. We don't know what that's going to do. If that's a huge miss, if the numbers are very different to what we predict, or if they're very different to what the professionals predict, then that could actually make a really big difference. Silver does look a little bit more bullish than gold. While we're just kind of staring at it, it actually could start to develop a range that's just a little bit higher than what it's been doing. That still is possible, but I don't see it breaking above 91.50, and I don't see it breaking below $78. So this is what we do at Algo Factory. We predict where price is going to go when it's going to get there. And we do it with a statistical degree of correctness, right? We're correct a certain amount of the time. And what it basically does is allow us to tilt the odds in our favor so that over time we are profitable. Win some, lose some, win more, lose less, right? That's how we do. We teach you how to do that. We're very good at doing this. As a matter of fact, you get a preview in the video if you click on the description, the link in there. Free algo, like I talked about before. Quick video, shows you how to build an algo, turn it into code, the tools traders use to connect that algo to their exchange so it can trade without you sitting at the computer. You just have to optimize the algo first before you do such a thing. Either way, thank you for watching. We're going to be back tomorrow, Tuesday morning, 8:30 a.m. EST, as we always are. Tuesday, Wednesday, Thursday for the live show. We go on YouTube for about 10 minutes, and then the rest of the hour is for our private members. We hope to see you there. AlgoFactory.tech. Learn how to trade like a hedge fund pro, and we will see you very soon.